I think in both Canada and the US that the fear of an overt grab for private assets is probably overblown. I think even the Trudeau administration experienced fairly severe backlash for their idiotic overreach around the truckers' convoy. People often ask me when I was at Sprott whether I felt that nationalization of precious metals or nationalization of IRAs was a real threat. I've come to understand, I think, that uh, there are easier and cheaper ways for the government to steal your wealth.
Financial expert Rick Rule discusses the fears of government overreach in Canada and the US, specifically in relation to private assets like gold and IRAs. He argues that the risk of indirect wealth confiscation through methods like debasement of currency, increased taxes, and regulations is greater than a direct overt grab. Rick emphasizes the need for us to understand the uranium market, suggesting that now is the time to consider investments in second-tier uranium stocks. He cautions against frauds in the market and highlights the potential for significant gains. Watch the video till the end to discover Rick Rule's valuable insights and make informed investment decisions.
One would be through the debasement of currency, the other would be through raising taxes and fees. An overt grab for your wealth through your IRA or through your gold might be met by some Americans with an armed response. If the government were to come for your IRA or to come for your gold through the front door, which is to say to nationalize it, there would be an extraordinary political response and an extraordinary threat. If they come through your wealth, if they come for your wealth by quantitative easing, by inflation, by increased tax, by increased regulation, it's extremely popular. There's no risk to them. So I think that the risk of backdoor confiscation is much greater than the risk of front door confiscation, although I wouldn't put anything past the big thinkers. I think for people who are not invested in uranium, that they need to get on it. The people who are already participating, my suspicion is that it's time to begin to take more risk. I have, as you'll remember, been advocating purchases of the Sprott Physical Uranium Trust, Kazatomprom, and Cameco. It's time now to come down come down the quality chain, go up the risk chain, if you will. The second-tier uranium developers and producers haven't moved, and make no mistake, current pricing with 72 at Sprott, and the high 70s in the term market give companies the next gens of the world, the bosses of the world, the fissions of the world, the UECs of the world, enough pricing stability in the term market that they can finance these projects into production now. And the removal of that sort of financial risk and the removal of the time risk means that my suspicion is that these stocks will continue to re-rate. This is not for the faint of heart. These are speculations for people who are willing to spend the time and treasure necessary to understand the uranium market. But I think the good times in the second tier stocks are just getting started. Unfortunately, the biggest market movers are always the frauds, which occurs late in the cycle. Hopefully, your listeners will be wise enough to avoid those sort of hockey stick charts. It's worthy to note that the backside of a hockey stick is just as steep as the front side, but it's a lot less fun.
In this next discussion, Rick Rule, a seasoned expert, shares his perspective on various investment opportunities and market trends. He begins by addressing the negative sentiment surrounding silver, expressing his bullish stance and anticipating a shift towards positive precious metals narratives, potentially leading to significant gains in silver equities. Rick also highlights the often overlooked rare earths sector, emphasizing the potential of high-quality deposits outside of China, which could surprise investors positively due to growing demand. Moving to the energy sector, Rick discusses the enduring profitability of conventional energy investments, suggesting that peak oil demand might not occur until 2060 to 2065. He advises investors to focus on the oil and gas industry, given the consistent cash flows these businesses are currently enjoying. He also raises concerns about the misrepresentation of mining's environmental impact in the context of ESG, environmental, social, and governance criteria, emphasizing the need for a more balanced perspective. Additionally, Rick addresses challenges faced by precious metals dealers, discussing the difficulties some encounter with lenders. He hints at his anticipation of entering the market, offering financing solutions for reputable dealers, thereby providing valuable insights for potential investors and traders.
Uh, I, I mean, the popular commodity that everybody hates right now, hated commodities. The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020. I think the other thing that's going to surprise us will be very high quality rare earth deposits in places outside of China. The rare earths business is virtually unknown, but these things are extremely critical. Demand for them is growing very rapidly, and whether there should be or not, there's a sense outside the Chinese supply chain that alternate supply chains need to evolve. So I think that high quality rare earth deposits, when and as they occur, will surprise people to the upside. I believe that you will see. This is an old theme, one we've talked about for a long time, but I think you'll see oil and gas prices higher for longer. I'm not sure that this is a speculative place to be, but for investors, being in conventional energy, given the cash flows that conventional energy producers are enjoying right now, irrespective of the wishes of the big thinkers, my suspicion is that peak oil demand occurs about 2060, 2065, and tapers off over 40 years from then, which is to say that these high current yields, I think, will continue. That isn't to say there won't be some perturbations, there won't be some volatility. But for investors, not speculators, I think Warren Buffett has aptly demonstrated that the oil and gas business is a wonderful place for a real investor. I think ESG is a continuing risk to investors, particularly because ESG is misstated. The environmental impact of mining relative to the surface disturbance it causes is very, very, very small because you have very high units of value coming from very small plots of land. I suspect that the golfing industry in the United States, causing monocultures to exist in riparian areas, does more environmental damage than the mining business does. But it's green, so people like it. Let's look at the S part of ESG, the idea that there's a billion people on Earth with no access to primary electricity means that a primary S goal should be providing more energy. It's the misguided nature of ESG and the political pressure from the illiterate and innumerate voters that's the real risk. And sadly, there's no way around it. I can't comment on individual dealers because there's some dealers that are very difficult to bank. You lend against their inventory, they sell the inventory to clients, they take the money and fold up shop, and you as a lender are left holding the bag. That's true in many retail businesses, precious metals dealers notwithstanding. To the extent that reputable precious metals dealers like Miles Franklin experience difficulties with their existing lender, once Battle Bank is up and chartered, I really look forward to competing for that business. Certainly, if we believe that gold and silver held in segregated accounts is great collateral, then we believe that providing selective flooring financing for precious metals dealers is a similarly good business. And we will be on that business like white on rice.
Thank you for tuning in to this eye-opening analysis. We hope you found this discussion insightful and thought-provoking. Remember, understanding the complexities of the financial landscape is crucial in making informed decisions about your investments. If you appreciated the insights shared in this video, don't forget to hit the like button, subscribe to our channel, and click on the notification bell so you never miss an update. Share your thoughts and questions in the comments below. We love hearing from our viewers. Stay informed, stay vigilant, and most importantly, stay ahead in your financial journey. Until next time, take care and invest wisely.